Well, thank you very much for joining us on this Friday. John Jenkinson with you, and I also invite you to be sure and join me for the evening edition of Commodity Wrap. That comes up tonight on Rural Radio, channel 147 on Sirius XM, and also join us for not only the Rural Evening News, but also Facebook Live. We're going to visit this afternoon about what we saw today in the market activity. Speaking of that, we had the overnight sale, or the weekly export sales numbers that were released this morning. Now, they were released 24 hours behind usual time, but that was because we had Monday as Columbus Day. So corn came in at 368,500 metric ton. The soybeans themselves, 1.7 million metric ton, a pretty big number that the trade was kind of expecting. And a lot of that, of course, was, well, one of them was Egypt, but China bought quite a bit of soybeans this time around, and that was going into the trade talks when they were here last weekend in the United States. So kind of a big number there. The wheat, 395,100 metric ton. Real quickly, let's go through the futures then, and then we'll visit with Brian Hoops and talk to him about why we're seeing this corn market down anywhere from 3 to 3.5 pennies. The December corn, that's the new crop, 391 1/4. We are off of the low of 389 3/4 anyway, by about a half a penny. July is down 2.5 at 415 1/4. Let's go on to the soybean market now. Now, we've been running about 3 cents higher here. Now we're 3 3/4 higher. Make that 935 1/4. The May is up 3.5 at 968 3/4. December Chicago wheat now on the higher side by 1.5, 527. The July up 2 pennies. Kansas City wheat, though, still down 1 3/4 on the December. July down 2 1/4 at 458 1/2 if you're thinking about maybe pricing some of your 2020 July wheat for next year. All right, let's visit with Brian Hoops. He joins us now from Springfield, Missouri. Good morning, Brian. This grain market here kind of quiet, kind of mixed here this morning on this Friday. How much attention do you think the trade is going to pay to next week's harvest progress? Because crop progress is pretty much waned now.
Yeah, exactly right, John. Good morning. Good talk with you. Yeah, we're going to be well behind the normal pace, well behind last year's pace when we look at our crop harvest numbers come Monday. But the trade kind of knows that. We're kind of accustomed to that. And so we're starting to look more at harvest weather. And it looks to be a pretty open weekend this week for producers. And we're seeing a little, hedging pressure against the corn market, I guess, ahead of the weekend as some of the elevators get ready for a very active weekend. Next week we may have a shot where we can harvest for a period of time before some more rain comes in here. But we've been noticing basis levels for corn starting to weaken around the Midwest as there is some product being moved. The spreads from Dece to July, we normally should be carrying a normal carrying charge of 28 to 30 cents, and it narrowed up last week to as much as 17 cents, and now it's starting to widen back out as that normal carry is being placed back into the market. So we're back to 24, which is far from normal, but it is telling us that the market is getting enough product right now. And when you look at our export sales that came out this morning, they're just so dismal. We're not able to use a lot of our corn for export markets, and that means that the market should fill up its pipelines pretty quickly when we get some harvest movement in here and product being placed into commercial elevators.
Brian, I don't have a whole lot of time here left before we have to go to a break, but I do have one question, and I don't want to spend a whole lot of time on it, but there at Midwest Market Solutions, are you folks still looking for this USDA number to come in here around that 168 for corn and in this 46 range for beans?
We're going to be below that. It's going to take some time to get there. I think the USDA probably doesn't recognize, 165 on the corn that we're looking at until maybe January. Okay. It's the later planted corn and soybeans that are going to yield worse and pull that national average down. And we're going to have a long time before we get into a lot of that product. It's going to be very late October, November before we are able to harvest that and get that information.
Oh, yeah. You make a great point. And some are already saying it could be January or February before we know that number. Stay with us. We'll be back in just a moment with more with Brian right after this here on the Market Day Report. Yesterday morning in the early morning hours before dawn, there was an explosion and a fire at a Cargill beef plant in Dodge City, Kansas, and that basically took that plant offline all day. The expectation going into today was that maybe operations would resume, but Is that happening yet or not? Let's find out. Brian, what have you heard so far this morning?
Yeah, that the market always likes to trade fear before the fact, and the fear was that this plant will have received more extensive damage than previously thought, and the kills may not ramp up like they had originally told us they would. They thought maybe we'd start killing as early as yesterday, and that didn't happen. And then they were supposed to be open today, and that didn't happen. So now the fear is maybe we're going to be closed a little bit longer than expected. And I think the market is selling off on that maybe this is going to be a drag on the cash markets here for the near term. And the Packers, no doubt, are going to use weakness in the futures to try and buy cattle at cheaper money. We did see some 108 bids surface in the Southern Plains after the futures market broke. And I don't think we're going to sell at that price level. That October board's kind of hovering right around 111, anticipating that's where the cash is going to come in this week.
Well, we got as high as 112.50 in that contract. We're down 168 now at 110.72. We got as low as 110.03. So what is that? Almost a $2.47 trading range. That's pretty wild. We've seen this happen before when we had the Tyson fire plant in Holcomb.
Yeah, exactly. And that plant, has been closed for quite some time. Market did adjust as we increase kills in other facilities to make up for it, but that plant's still closed. And so now you have another kill facility in Kansas being closed at the same time. It's weighing on the market. I was surprised we didn't see more weakness yesterday, but we're certainly seeing that today.
By the way, those plants are only 50 miles apart, so it's really got to put some kind of a headache on the feedlot managers. Let's look at the feeder cattle and the hog market here real quick. I want to get your thoughts over here when we get to the hogs, Brian. November feeders down 140, 142.93. The January down 128 at 139.57 following the fats. Let's go on now to the hog complex. This hog complex is all lower, with December down $1, February down 20, and April down 47. So still a little bit of pressure over here, even though we saw some pretty big numbers. Brian, thank you very much for joining us. Brian Hoops here this morning with Midwest Market Solutions. Obviously, that plant issue has got the market a little more concerned today than what some had thought originally this morning.
All right. Well, we'll see how the day rattles out. Thank you very much, John.
Thank you.